Hi guys, welcome back to another video. This is going to be a very quick video, just handing over my downloadable valuation models and 3 different IRR calculations for Alibaba. I had comments in the previous update just asking to upload it, and I forgot to do so, so I thought I'd just show you the updated version and walk through quickly how you can use it as a tool for deciding whether to buy Alibaba or not. I've done a 5-year valuation and a 10-year valuation, which are available as separate tabs, as well as an IRR calculator that demonstrates what return Alibaba is likely to give us over the next 5 years if certain scenarios play out. As you can see here in the 5-year valuation, I've plugged in 5 years of historical data that you will need to analyse Baba's past performance, and also plugged in all of the formulas on the assumptions tab here on the right. So all you need to do is adjust for growth estimates and maybe the terminal value to get your intrinsic value for Alibaba, as you can see here below. As we're nearly at the end of fiscal year 2021, as I mentioned in the last video, their fiscal year 2021 ends in March of 2021. So I've gone with their guidance revenue that was provided in Q3, which is 650 billion converted back into US dollars at the current rate, which gives us 97 billion US dollars of revenue. Thereafter, I've just applied a 25% growth rate, which they're well above at the moment, so it seems fairly conservative to do so. I'm using an EV to EBITDA multiple for Alibaba to get the terminal value. To be honest, it is the most conservative metric to use, as net income and free cash flow all tend to be higher than EBITDA. But if you wish, you can change your terminal value to a PE multiple using the historic PEs down here as a guide, or use a multiple of free cash flow or a free cash flow yield. Up to you, really. Just make sure if you use a PE, then you are not adding back cash and subtracting debt, as you already have a market cap figure from the PE. EBITDA and net income have all, as well as free cash flow, have all been calculated using the average of their historical margins, which should be quite conservative considering they have large areas of the business such as cloud which haven't been contributing to earnings yet, but are expected to start producing a profit as soon as 2021. You can also change your discount rate to reflect whatever your minimum acceptable rate of return is. Mine's 15, as you can see here, as always. As you can see, I'm showing Baba as very much undervalued based off of not too bullish assumptions relative to their past performance and growth tailwinds. You can work out your estimated intrinsic value by changing some of the assumptions to fit whatever you see playing out, bullish or bearish. If you don't already know how a DCF model works and what formulas are plugged in, then I'll leave a link to my building a Tesla and Facebook valuation model from scratch, which shows you a step-by-step of how everything is calculated and plugged in. But even if you're not sure, you can still use this as a great tool to simply work out your value for Baba and expected rate of return. Second tab, you have the IRR calculator, which I demonstrated in the previous update. You can also change this and the scenarios to reflect whatever you feel will happen in the next 5 years. All of the future free cash flows or earnings per share are calculated using the growth rate. And terminal value can be used as a PE multiple or a price to free cash flow, depending on what metric you prefer. So feel free to play around with that to get an idea of what the 5-year return might look like for you. Lastly, the 10-year valuation. This actually increases Alibaba's intrinsic value, even with growth slowing in year 5 to 15% and the exit multiple dropping to 20 times. I personally prefer a 5-year model at the moment, as estimating out 10 years is almost impossible to get right. That's a very long time for anything to happen and the numbers to get very big. Again, use all of them as a tool to value Alibaba if you're unsure on whether to buy or not. We never know which way a stock is going to run from day to day. Of course, there are catalysts that we can predict will send a stock either up or down. But over a medium to long-term period, the stock price will reflect the underlying results of a business. So it's important that you know what those underlying results will look like. Okay, that's about it for this video. I hope you find the valuation template useful. The link to the sheet will be down in the description below. And until next time, good luck with your investments.